Morning, guys. It's Wednesday, April 9th, 5:24 a.m. Central Time. Grain markets are higher this morning. May corn futures up 1.5 at 470.5. May soybeans up 5.5 at 998.25. May Chicago wheat up 3 cents at 543. May Kansas City wheat up 9 at 570.5. May spring wheat up 4 3/4 at 605 3/4. Some new tariffs went into effect overnight. Let's start there.
The Trump administration's 104% tariff on Chinese goods took effect shortly after midnight. China has remained defiant to Trump's tariff threat, denouncing the move as blackmail and signaling that a near-term resolution remains unlikely. Meanwhile, President Trump has accelerated efforts to negotiate trade agreements with key trading partners such as South Korea and Japan. Despite the effort, the U.S. implemented reciprocal tariffs on approximately 60 countries beginning today. Critics of President Trump's tariff policies warn that these measures could cause inflation to rise and potentially trigger a recession. A recent Reuters poll found that three out of four Americans expect prices to rise as the new tariffs begin.
Some markets are reacting, some markets are not. The stock market sold off yesterday. It's down sharply this morning. Crude oil is down sharply this morning. Yet you look at soybean futures and they've acted okay. And that's kind of confusing, right? China has been the largest buyer of U.S. soybean on the export market pretty much every year. They account for almost half of all U.S. export commitments this year. And the May soybean contract, if you look at this futures contract, we closed higher Monday, we closed higher Tuesday, and we're trading higher this morning. There was a knee-jerk reaction following all the tariff news that began last week. You have still kind of an ugly gap on the chart. It's not the best looking chart, but this thing could be acting a hell of a lot worse. Look at this, though. You look at the old crop versus new crop soybean spreads, and they have rallied sharply. So you've seen some strength in like the May contract, the July contract, but then you go out to the new crop contracts, your Novembers, and they've been weak by comparison. And why is that? I think it's because most of China's export business with the U.S., most of the soybeans that China buys from the U.S. for old crop, it's kind of behind us. They're not going to buy a whole lot more old crop U.S. soybeans this time of year. They typically don't. Most of what they've bought has already been shipped. New crop is what is in question now. Here's a chart if you guys are watching. U.S. soybean export sales to China for the next marketing year. And you're not supposed to be able to read every line on this chart, but the general idea is that typically, and every year is a little bit different, but April, May into June is when China typically begins buying new crop U.S. soybeans, so for delivery after U.S. harvest, essentially. So maybe that's the reason that the market is bull spreading and new crop contracts have been soft. But I'll tell you what, soybean market overall has acted perhaps a lot better than many people would have expected given the headlines.
Equities and crude oil fell sharply on Tuesday. Stocks rose early in the day, driven by optimism surrounding potential trade deals. However, by mid-morning, that positive tone had dissipated. The Dow Jones declined by 0.8%, falling to a 52-week low. The S&P 500 declined by 1.6%, while the Nasdaq fell 2.2%. Both indices had gained more than 4% earlier in the session. Also on Tuesday, WTI crude fell nearly 2%, closing at $59.58 per bushel, its lowest level since April 2021. Oil prices have dropped more than 15% since President Trump announced a new round of tariffs last Wednesday.
Start off with the stock market. Here is an interesting chart, to say the least. So this is the E-mini S&P 500, and I threw this chart in this morning because it includes the overnight price action. The cash chart looks very similar, but it's slightly different. You've got a trend line that comes up from the COVID low through the bear market low of 2022, and that is almost exactly where we bottomed this week on the continuation chart futures. So we're getting very close to bear market territory. I'm not sure if that support area holds or not. We are now 19% removed from the all-time highs at yesterday's close in the cash S&P. If you're 20% or more removed from the all-time highs, that would be considered bear market territory. Interesting commentary or thoughts or observation from our friend Jim Urio on Twitter. Spoke to a wealth manager yesterday who painted a funny picture of his clients. Says that calls to de-risk and calls to add risk are coming in 50-50, and they are split distinctly along party affiliation. That's extremely interesting. The stock market is not supposed to be political. So I think what he's saying here is that if you're a Trump person, you're calling in and saying, this is all going to work out. Let's buy some damn stock. And if you're an anti-Trump person, you're saying, oh my gosh, this guy's going to kill the country. We've got to sell everything. In the past, selling everything on a 20% break is not necessarily the best strategy. Past performance, not indicative of future results, of course. Crude oil prices not looking good. Lowest trade since sometime in early 2021. Perhaps some channel support on this weekly WTI chart around $53. This could be a recession indicator. Certainly, people think demand's going to slow down, and also we've got an OPEC production increase.
Corn futures rose yesterday in anticipation of USDA's report that will be released tomorrow and ongoing weather concerns. The nearby May 25 contract gained more than 4 cents to settle at 469 per bushel. Analysts expect the USDA to report U.S. ending stocks at 1.5 billion bushels, a 2% decline from the March estimate. World ending stocks are expected to decline slightly to 288.2 million metric tons. Markets also found support from planting delay concerns after historic rainfall swept across the Midwest and southern U.S. last week. So far, corn futures have remained largely unaffected by recent tariff developments. The USDA will release its crop production and WASDE reports tomorrow at 11 a.m. Central Time.
Yeah, old crop corn futures have acted really well. This nearby May contract has been strong. We took out some near-term trend resistance. Maybe you've got a shot at that 477 high that we posted back in March. Dees corn has not acted as well. It's been soft, and maybe that's because the trade is of the opinion that acreage could rise even further relative to USDA's March projection. And I think that's possible given the weakness in new crop soybean prices. Old versus new crop futures have been strong. You've got a rally in this July-December spread. Export demand for corn is going to stay pretty strong. I've talked in the past about how the corn situation, both globally and domestically, is pretty tight. I had a really good video, I thought, with some great charts about that situation a couple weeks ago. So corn acts really well. And the biggest buyers of U.S. corn are Mexico and Japan. It sounds like we're going to kind of come to the table and make deals with them. So market's not concerned.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
I used to do these chart dump videos like once every 2 or 3 weeks, and I stopped doing them. And I decided to do it again yesterday because we're in such volatile markets. So basically in about 7 minutes, I ran through, 15 or 20 charts and pretty much explained exactly what's going on in the world with regard to the markets. Everything from fuel to crude oil to equities, metals, livestock, treasuries. How is the money flowing? Where is it flowing to? What's the market concerned about as a result of this trade war? I had a ton of positive feedback from this, so I guess it's gonna be backed by popular demand. Brian Splitt's gonna be on and do some more specifics with regard to corn and soybean and wheat charts, probably some livestock stuff also. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. It's information only. We just want to send you our info for $50 a month. We don't want to sell you anything else. We don't really want to talk to you. We're not going to send your cell phone number to anybody. You don't even have to give us your cell phone number if you don't want to. Text message service is optional. But sign up for that deal this morning, guys. You will see the 6 most recent premium videos in your first email.
U.S. oil and biofuel groups have recommended a significant increase in biomass diesel mandates. In a meeting with the EPA last week, the coalition proposed raising the 2026 federal mandate to 5.25 billion gallons. Currently, the mandate stands at 3.35 billion gallons. The proposed figure is slightly lower than the range of 5.5 billion to 5.75 billion that was considered ahead of the meeting. Although the suggestion only applies to 2026, the EPA plans to issue a proposal that covers both 2026 and 2027. The coalition claims that the EPA's prior mandates hindered the development of the advanced biofuel sector and negatively impacted the market.
I suppose this is a step in the right direction. This is the coalition that Trump wanted to have formed, and it has been formed, and now they're trying to work through the details here. So I don't know that this is any like big groundbreaking news, but maybe a step in the right direction towards some biofuel policy that can actually work for us.
AGCO plans to suspend certain agricultural equipment shipments into the U.S. The move comes as the company assesses the impacts of President Trump's tariffs. AGCO owns multiple machinery brands such as Massey Ferguson and Heston. The company will continue importing machinery parts. In February, AGCO was already projecting 2025 sales to be lower than 2024, even before tariffs were a factor.
AGCO has production of machinery and equipment and parts like worldwide. I mean, North America, South America, in Europe, in Asia, all over the place. The like completed machinery pieces, I would assume it's Mexico. That's maybe what's going to be held up, but I don't know specifically. It's interesting that me and Chris just did a video earlier this week about how machinery and equipment inflation is going to kind of flatline here for a little bit. And maybe that's not the case if this tariff thing is going to kind of throw a wrench in the works of that.
Extreme weather may pose a threat to Russia's wheat crop. A severe hailstorm recently damaged crops in Stavropol, the country's third largest wheat producing region. Additionally, a large portion of Russia's wheat producing areas experienced snowstorms and sub zero temperatures last week. Despite the volatile weather, Russia's ag ministry maintains that current crop losses are below 3% and the overall situation is stable. The majority of analysts project this season's wheat crop at approximately 130 million metric tons. Russian authorities have warned they are prepared to implement export restrictions if this season's crop falls short of expectations.
The market hasn't really reacted to this. You've got some weather issues in Russia and also in the U.S. You had the flooding and excessive rains in the Midwest. You've got some dry conditions in the southern plains. I didn't look at the forecast this morning, but I know they were talking rain maybe a week out for HRW wheat country. So something to pay attention to. But wheat futures have been kind of lackluster, just choppy to higher the last few days.
USDA reported a flash sale of corn yesterday. U.S. exporters sold 9 million bushels of corn to Spain for delivery during the current marketing year. Accumulated corn sales are up 24% compared to the same period last year. U.S. corn remains competitive on the export market.
Yeah, Brazil would be our competition, and they are unlikely to have any sort of competitive offer on the export market until midsummer. And that's part of the reason to go back to old crop corn futures and the strength there, and also the strength versus new crop. A lot of it has to do with exports. We're the only game in town right now, and we probably will be for another couple of months. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were down 55 cents to $1.12 higher. Feeders were down 45 cents to $2.60 higher. Box beef was also mixed. Choice was down 140 at 338.10, and select was up 276 at 322.06.
Lots of volatility in the outside markets. The Dow Jones is down 450. The S&P is down 46 points. Bonds are down almost 2 full handles. The U.S. dollar is down sharply. Crude oil is down $2.60 in the May WTI at $57 even. Gold's up $70 this morning at $30.60 in the June COMEX contract. Have a great day, guys. We'll be back on Thursday.